following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests, and
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
It's Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Believe in yourself and everything you can be. James Garner. Market-wise, let's take a look at it out here. We have the Dow Industrials up 198, Nasdaq up 46, S&P's up 24, gold contract flat at 1,081 an ounce. Silver up 16 cents at $14.22 an ounce. Platinum up 290 at $8.65 an ounce. Copper down 5.5 pennies at $2.11 a pound. Light sweet crude up $1.14 at $41.88 a barrel. Bonds. The 10-year up 4.6, 126.21. 30-year down 4 at 153.08. King dollar up 413 ticks, trading at 99.51. The euro is down 93 at 106, and the yen is trading 123.24. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do we have out here? Well, first off, we want to make sure that we send a lot of great white light, a lot of prayers over to Paris. Bottom line, heavy scene. No two ways about that, folks. And just send it out there, send that light out there, because a lot of people are hurting in a big way. And, you know, bottom line is that when I talk about yesterday's gone, tomorrow's not here, what are you doing right now? Remember that, because you know what? You never know. That's the real bottom line. We take a look at the SPY. This is what you have with the SPY. SPY is set up. We have done, you're going up. We've done 81 million shares. Now, what we've done out here is this. So last week, come down on the daily, you come down on the weekly, and you come down with volume. We rejected lower price today. We got to 202.18. We're going to have lighter volume. So what that sets up, that does set up a bounce. I expect more than likely we'll see this bounce into 206.95. And we'll see if you get a contraction of lighter volume out here tomorrow, that's a larger ABC down. We broke the B point, and when we broke the B point, we had broken it with 121 million shares versus 131. You get down there, we did have an expansion of volume. As you broke the B point we're talking about was the low of November 9th. You did have lighter volume. Now we'll see what kind of a bounce we have. You take a look at the NDX 100, the 3 Qs. Same type of setup in the 3 Qs. What you have with the 3 Qs is this. The three Qs out here, they rejected 109.48 today. The low of Friday was 109.78. You're going to have lighter volume than that week, so now we'll see what kind of a bounce you got. And in both cases, where I'm looking that the bounce would come into is that November 9th area. The November 9th area inside the QQQ would be, the low of that is 112.86. That's how that number is generated. Now, when you look at the market, bottom line, you have a market percentage-wise. The Dow is up 1.1. The S&Ps are up 1. The Nasdaq is up 0.9%. That being said, what has continued to happen, and it's all over the place today again, is that you have stocks that are down big numbers, folks, okay? You get Priceline down another 3% or 37 bucks. Intercept Pharmaceuticals is down 4%. You have Dillard's down another 7%. You get Radius Health down 6%. Pretty amazing. Puma Biotech is down 6%. You got Arrows Pharmaceutical down 6%. Shark Therapeutics is down 6. Starwood is getting taken over, and that's down 4. So that's pretty intense inside the texture of how this market is operating. Bottom line, I expect what you're still going to see is lower price. Why? What we've done is this, okay? Bottom line is that you've broken lower. If we go take a look at this S&P, and you want to take a look at this S&P as to where we are on a weekly basis, this is how it's set up. First off, the SPY never could get to its high, which is the 213.78, which is the May high, by the way, okay? So we come off the May high, 213.78. You get down to 182. You did the bounce, and the bounce got you up to 211.66. Now, that bounce, folks, was anemic beyond belief. You did 466 million shares versus 865. Bottom line, what I expect you're going to see out here, you're going to see the same type of bounce, lighter volume. All it does is set up the next leg down in this market. We go take a look at the markets today inside the Dow as to what the strength is. The only stock that's negative inside the Dow today is Pfizer. Pfizer is down 17 cents at 33.10. The strength inside the Dow, ExxonMobil is up 246. Chevron is up 331. Walmart is up $1.35, and United Health is up 244. Out of those equities there, Walmart and United Health have been dogs big time. Exxon, if we take a look at Exxon, what you're seeing with Exxon is this. ExxonMobil, we're off the high of 87.43. That high was generated in November 3rd. You come down, and we hit a low on Friday and with volume. We're bouncing with lighter volume. Exxon and Chevron are setting up for nice buys because they came off the bottom. They went from $66 August 24th up to 87, okay? The oil equities, folks, love trading in big ranges like this. What I expect you're going to see, if you want to buy it, let it back down. Exxon somewhere around 73.40. This bounce today is on anemic volume. We came down on Friday with 5.8 million. You're going up today in 2.7. Bottom line, you'll get a little more of a bounce. I suspect that's a very large ABC structure on the way down, and we'll see how it sets up as it goes against its strength. Walmart, what do you have with Walmart? Bottom line with Walmart, Walmart's a dog extraordinaire. The 13F filings, come out today, and Walmart has been going from a price point of $90.97 January 1st. You're at $57.81, and what you have inside Walmart, which we know now, is that if we take a look at the large holders, so the 13F filings, folks, the 13F filings come out 45 days after the close of the quarter. So these come out this weekend, and what you're going to have, one of the large owners out there, Warren Buffett, the last filing, he sold 4.1 million shares. Well, guess what? He has 63,500,000 left. Bottom line, I expect what you're going to see is more selling. If you take a look at the sellers versus the buyers, it's pretty extraordinary. Fidelity is a buyer. The last filing, they bought 4.4 million, which is a third position. So the buys are 4.32222 million, that is. The sells, forget it. 5.4433322. Big sellers, folks. You stay right there. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow up 200, Nasdaq up 47, S&P's up 25. Inside the NDX 100, the leaders versus the laggards. This is what you have out here. The leader, JD.com, that's up $2, trading at $28.84. You get Netflix up $6.74 at $1.10. Liberty is up $1.95, and that's Liberty K share, and the A share is up $1.60. Taken away from it on the way down, you got Priceline down $38 at $12.59. Electronic Arts is off $1.91. We have Biomarla rather down $2.65, and that's interesting. And Liberty A shares, that's the tracker, okay, is down $1.16. Inside the, if we go take a look at a few more of these 13F filings, this is going to get pretty wild watching this thing shake out. So VRX, right? We know that the amount of destruction on Valiant has been pretty intense. It's down another $1.70 out here today. And what we have, you're at the lows. The low thus far, November 5th, 73.32. Now it hit 72.25 out here today. And we take a look at these filings. Now, this filing is as of June 30th. And what you're going to see is that the buys versus the sells, put that one there. So, now this one is really a trip, because looking at this, I'm saying to myself, man, did Paulson go in for more? So, Paulson and Company, it looks that they bought another 6.9 million shares, and now they have 9 million shares. And we'll go over this, because as you bring this back to June 30th, folks, these are the equities that they owned as of June 30th. Oh, yeah, okay, so at Paulson, that's all right. It's not that it's all right. He bought them then. The one we want to look at is as of September 30th. That's what we're looking at, because the September 30th filing was done over this weekend. It's 45 days later. So Grantham, these people really get toasted. They bought 6.4 million shares as of September 30th. Now they own 8.1 million. Run Cuniff bought 2 million. They're really going, doubling down. That was a filing that they own 10.5% of the company now. Let's see. Okay, so those are the big, there's a lot more, but those are the big ones. Now the sellers inside of that as of September 30th. You had Barclays sold 2.9 million, almost half their position. Institutional Capital sold out. They sold 1.5 million. They took their loss. Oh, here's Michael Pearson. So Pearson, the CEO, this is in here. He got forced out by Goldman Sachs. 1,297,000 shares. And we have, let's see. Those are the bigger ones out here. So now if we go back and we take a look at where Valiant was when you're dealing with September 30th, this gets pretty intense because September 30th, there it is right there. Okay, so September 30th, Valiant was at 100. The low of September 30th is 160, and right now you're at 73.86. Bottom line is that is going to put more heat on the amount of people that actually double down on this. When you do take a look at Valiant, this is like just incredible, actually. You know, Valiant looks like it was going to trade at $55.80. 55.82 is the August 2011 number. And when you do look at August 2011, by the way, folks, DDS, if you take a look at some of these retailers, Dillard's right now is down an additional $5.61 today at $71.90. This also is going into, and this is what you want to pay attention to, the next level I expect that we're going to be going into is that August 2011 area. You know, the first area 4 or 5 months ago was the October 2014 area. We came into that, way too much volume, tested it. The next area is this August 2011 area. In Dillard's, the high of that is $54.34. Thus far, we have gone to a price point of $68, and that was coming off the highs of $144. Now, if we go over to Amazon, we take a look at Amazon. What we do have with Amazon is this. You know, Amazon's been a one-way ticket. That one-way ticket has been up 451. It was trading in August. Gets all the way up to 675. What's going to be intriguing here now, today what it's done, it's rejected lower price, yet it has higher volume. So what you have in this context of that, even today, 6.6 million, you're going to be right back down into this level. If we take a look and we put this on the weekly basis, what you're going to see is that 552, 619. Okay, there it is. This is pretty wild. So $619, folks, is where, even on a weekly basis, you have good support. Now, what we just did is we come down to 622. We've done that in one day with 6 million shares. The correlation is 30 million. So when you do 6 times 5, it's like 30 million. So we'll see where this comes at the end of the week. But what that's saying is that if we keep volume up like we have in Amazon, by the end of the week, that means you're coming into that 30 million support level with about the same amount of volume on the way down. That sets up that more than likely you're going to see Amazon also crack and come into lower price. So that's going to be pretty wild if, in fact, that's what you have as we're coming into the Christmas season, because there's no doubt that the retailers themselves have got absolutely smoked. If you want to see something that's really wild out here today, it's Urban Outfitters. So check this out. This is how bad, evidently, retail is. Urban Outfitters hit a low today, $22.04. But guess what? Now here, just this blows my mind. The Urban Outfitters, okay? So their description is, of course, they got retail stores. They have Anthropologie, and Anthropologie is a great store. I mean, it's just a cool-looking store. They sell household, gift, merchandise, all the above. But guess what? Guess what they're doing, folks? They're buying a pizza chain. They're getting in the pizza business, okay? Urban Outfitters are going to buy, let me get the name of this. It's a pizza chain out of Philly. Urban Outfitters planning to get in the restaurant business. The stock fell as much as 10% Monday after the company announced the acquisition of Philadelphia's Veretti family group of restaurants, including Pizzeria Veretti chain. Bottom line is that, hey, you know, I guess, you know, this could be a very good move for them, you know, because bottom line is that I can't see Amazon getting in the pizza business. And that's what that might be all about. They're saying, you know what, I'm going to throw it in. I'm going to take some of my stores that have Urban Outfitters in them, whatever, turn them into pizza places. And you know what? There's very few pizza places that lose money, folks, because the bottom line is that when you're selling flour, that pizza, inside pizza, yeah, the cheese is expensive. But for the amount of money that they're getting per pizza right now, that's negligible compared to how many pizzas you can make with 100 pounds of flour. It's absolutely huge. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming right back. Dow Industrials up 228. NASDAQ up 53. S&P's up 29. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's take a look at some of the higher volume stocks in this market. One of these equities, you talk about an equity getting destroyed. This is pretty intense. This was let me pull this up for you first. So it's Clovis Oncology. It's down $68 at $30.75. And man, this thing just got taken to the cleaners. And I'm sure, I know it's a biotech. This equity here, it's a biopharma company. Acquiring, develop, commercializing anti-cancer agents in the United States, Europe. They plan on targeting specific subsets of cancer. This is an equity that has, let's see, 24, yeah, no, it has no revenue. Prior to today, it had a market cap of $1.1 billion. Bottom line is that I suspect, let's see what they're saying. This was a perfect story. This is a Bloomberg deal. This was a perfect story until it went dark. Two promising late-stage cancer drugs are speeding to the market with breakthrough therapy designations, a special FDA status that accelerates the drug review process, and owns both of them entirely. Its most advanced drug, which is for non-cell cancer, lung cancer, seemed possibly heading for FDA approval later this year. Goldman Sachs, meanwhile, had anointed this company as a takeover target. Morgan Stanley suggested that Amgen might be interested, noting how few companies had such promising late-stage assets. The founder had already managed to get the company bought by. The company founder had already managed to get a company bought for billions by a rival. The only question seemed to be around how soon the cancer drug would come to market. Bottom line is that they had released data this morning showing that the percentage of patients whose cancer shrinks or is cleared after getting the drug was far, far worse than what the early unconfirmed data suggested. Bottom line, big problem, you know. And anyway, it's, man, that biotechs can bring you to heaven, folks, or bring you to hell. So some of the other high volume stocks in this market. You have Freeport-McMoRan up 19 cents. Apple's up $1.79. We'll go back to Apple. Hilton Worldwide is down 62 cents. Netflix is up $7. Starwood is down $2.90. Starwood now is a takeover. Starwood, which is HOT, folks, okay, that company was in play for the last 3 or 4 weeks. What you had 3 weeks ago is that it went from $67 up to 78, I believe, yeah, up to 82. Back down today. Bottom line is going to be taken over by Marriott now, and it's a stock deal. That's how this thing is shaken out. NFLX. Let's go take a look at Netflix. Netflix out here is trading at $1.11, and this is in consolidation. You know, Netflix has already come off the highs of 129. You're at 111. Yeah, and that's going to make its way. You know, this Netflix looks like it wants to make its way down to $85, $85.50. You get that high volume spike low from August, hasn't been tested yet. You go up 2 weeks ago with 66 million shares. You come down last week with 74. We'll see what how it wants to test the highs as it runs back up into those highs. Now let's go over to Apple, because Apple, folks, bottom line, has been selling off. It's real subtle how Apple's been selling off. But what we do have is that whoa, there we go. 1 second. Sorry about that. You're trading at 114.05. We pull this back. You're going to see that it's off the highs of 134. It's trading where it was trading in November of 2014. And so what we have here is that, you know, we came down. Well, first off, 2 weeks ago, you went up with 195 million shares. You come down last week with 216 million. This is building cause to get into that swing low of the 28th. And the 28th, that's $92. That's how that thing is shaken out. I expect, you know, we'll see what the next catalyst is for Apple to go south. We did have, no doubt, out here. You had some sellers out here right on the open today. You know, it had a slight bounce, but the first sell out there got it down to 111, and you had some real juice down at that 111 area. We go take a look at the Walmart. Walmart still can't get out of its way. 3M. What do you have with 3M? 3M, you're going higher today, 1.8 million shares. That's not a bad setup either. So 3M does want to go after that high of 160.09. We'll see whether it takes it out. After the close out here today, we're going to have Allergent Technologies. Allergent right now is trading up 57 cents, $37.34. Today's the 16th of November already. That's pretty amazing, actually. So Allergent, this will be interesting to see how this trades out. Why? Let's put this on a weekly. Yeah, this is going to be cool. Okay, so Allergent. So check it out. Allergent, what Allergent's done is this. When we came down August, you came down with 18 million shares. You went from 40 to 36. We went up 2 weeks ago with 8.2. So you went up with half the amount of volume, right? What that sets up is that sets up after the close today, we're going to make a run for 36.63. That was the low of last week. The way this actually looks is that what's game here is 34.68, which was the low that was established on the 2nd of October. So that's going to be, it's always exciting after the close when numbers continue to come out to see where these stocks are trading. Before the bell tomorrow, we get a lot of equities coming out. You get Dick's Sporting Goods, you get Home Depot, you get Click, and you get TJ Maxx Company. After the bell, we get Jack in the Box, and VIP Shop Holdings. That's been a mess. I know VIPS. I remember. Yeah, this is an ADR. It's hit a low today, 12 bucks. Yeah, this thing is a trip. So this. You talk about no volume at high. So check this out. Last time it had any volume, you can go back to March of 2014. Stocks at $18. The low is $12. You had 146 million shares. It goes to $30 and has 23 million shares. So check it out. So the supply and demand curve is 146 million. The highs have 23 million. We came down last week with 130 million. Big numbers. Big numbers, you know. The door is never big enough, folks, when folks want to get out. That's how all of these actually do shake out. You know, we'll see inside. If we go back over, let's go to the small cap arena. Small caps out here also rejected lower price today. You're at 114.84, and you got to remember with the small caps couldn't even make it to the swing point that was established in August 17th. It got up to the, I believe it got up to the September 17th, which is 118. Yeah, it did, and it failed on price and volume. You stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We get Marbell up 62 cents, Boeing's up $1.55, Exxon 262. Let's go over and take a look at that oil market. You have the oil service companies moving higher. Oil itself was moving lower this morning. It rejected lower price. It goes topside. So the oil market this morning got down to $40.06. We've done 496,000 contracts. It's going to be a tough one to see. So what we have with oil, folks, is this. The last move on oil, meaning the last move in the last 6 months, is that in June, oil was trading at $62.95. It goes straight one way. One-way move took it down to $39.22. You do a nice bounce, and the bounce, had juice underneath it. We got up to $51. Now you're back down again to this $40 level. And the way that we're in here today, we're in here with way too much volume. So, can it bounce up to this 43.06? Yeah, I think it can. Where I'm going with the 43.06 is that I'm going from the low of the October 28th level. That was some strength there. That's where it came off. We'll see if, in fact, this thing wants to break into lows. If we take a look at this on a continuous contract, we pull up a continuous contract. You put this back a bit. This has been a one-way trade. June of 2014, we're at $107. Straight line move got it down to $43. Now, what's intriguing here is that when you do a continuous contract, the longer that you actually stay under like $44, the more problematic it can get. The reason being is that we're in a lower trading range right now. The low of the continuous contract is $37.75, so that's $5 underneath it. But the longer that we stay underneath this, like $43, $44, the more problematic and the higher the probability is that this wants to go south. So, we'll see what. My take on the whole deal here is that you have equities that have been up for long periods, 6 years, right? You have PEs that are through the roof. So this is basically a technical pullback. It's not like Armageddon is coming down the line inside the economy. What is intriguing, though, is that inside the retail business, are we just not buying clothes? Because when you do look at the retail business, it's not. Let's pull up Home Depot for a second. It's not the car companies. It's not the Home Depots of the world that have got killed here. The retailers, though, the clothing retailers, absolutely have got killed. Yeah. So Home Depot is still at highs. And Home Depot, I believe. Let me see. Dave White was telling me telling all the Tigers and Tigresses when they're coming out with earnings. I believe Home Depot is tomorrow, right? Well, here, let me see. Yeah, the 17th. So Home Depot is going to be out before the open tomorrow, and I expect you're going to see that basically, it's not going to get killed. Let's put it that way. Home Depot has been on a tear. That's been a one-way trade. You go back to 2011, it's trading at $28, and right now you're at $1.20. And when you do look, there's a pretty cool study out right now that the correlation, and this is going to be a big number, the correlation between what home prices are going for right now versus what rent structures are going for. And even though home prices have going up dramatically, that structure, when you take the formula that what houses are going for versus what types of rents people are getting for them, I'm talking income now, whether you own it or you're renting out, we are still, even though the price itself is higher than in many cities than it was in 2007, the correlation is 25% lower because of the cash flow of the rental structure. So it's pretty interesting shaking that out. And then what you definitely want to do, if you're looking for a house out there, folks, go do it. Why? Because of the fact that mortgage rates are still low, and yet what you absolutely have to do is do the numbers on a mortgage versus what you're doing for renting. We were shopping yesterday. We were just shopping for some of the short-term units we have, and we met a few people. And what an intriguing conversation, because the conversation had to do with couples they had sold the house up in Charlotte. They were down here in Clearwater. They were looking at rents, and the rents for a two-bedroom was $1,675. And the guy was just saying, man, I can't believe the rents are that much. And this is a new place, and I could believe it in a heartbeat, okay? But the bottom line, I was saying, well, for $1,695, what happens, folks? It's 4 pennies a thousand. $400. Let's say $4,000 per 100. That's when you cut to the chase. That's what you're paying. Okay, so it's like, hold it, man. Just go buy a place. You can buy a place for $250,000. Okay, you can, depending what tax bracket you're in, you can write off whether it's 15, 20, 35% of the interest of that. It just totally makes sense. I think what happens is that most people just don't do the numbers on the aspect of buying something versus renting something. So we take a look at the bond prices. The 10-year right now is still at 2.26. So at 2.26, you're probably talking 4.1, 4.12 on a 30-year mortgage. But that's still very inexpensive compared to what you have in a rent. And, to cut to the chase on top of that, my take is that we're in inflation. Inflation is happening right now after this shootings in Paris. You can go back and forth. Says the Fed going to go up, not go up, all of the above. Well, we know that the European markets are not going to go up on their rates. The real key is the Fed going to go up in December? We'll find that out. The way that our bond markets are trading, the bond market started out strong today, but they have given it up. The 10-year, they didn't give it up on price. The 10-year should have had more volume. It's inside the larger range. We'll see how. I suspect the 10-year tomorrow is going to attack 127. We hit 126.30 today. You've done 894,000 contracts. That's not enough to have wide price spread and volume. You need about 1.2, 1.3 million. You got the price spread. We'll see if as it attacks 127, if in fact we can get over that with volume. If we take a look at the 30-year bond, what you have with the 30-year bond is this. 30-year bond right now is at 153.13, and with that, we've done 176,000 contracts there. That also is going to need more volume as it attacks that 154.18 level. King dollar, bottom line, King dollar is testing its last highs, and it is testing that high with dramatically lighter volume. So King dollar is kind of giving us quite a bit of information out here today. I suspect the high is going to get tested. The high that we're talking about is 99.60. 99.98 was the ABC structure on the way up. So we just missed that. But this is so watch this. Then we came off of that high, though, with 44,000. Now we're testing with 31, which is pretty good, which is real good, actually. But the 31's testing 49. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now up 205. Nasdaq's up 50. S&Ps are up 27. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow Industrials right now up 213, Nasdaq 51, S&Ps up 27. If we go overseas and we take a look at how we worked out last night overseas, this is what you have. The Hang Seng was down 1.7%. The Shenzhen in China was up 2%. The Shanghai was up 0.7%. The Nikkei was down 1%. Let's go over to Hang Seng first and take a look at Hang Seng. So Hang Seng is trading at 22,010. Last night, you were down 385. We came down with 1.8 billion. You're going into, yeah, it's going to go a little lower. So 2153. Okay, so we're at 2205. The next stop here is 21530. We go to the UK. We take a look at the UK. What we have with the UK was up $28 today. We got down to a price point of 60.79. And I won't have this volume till a little bit later today. Let me go look at the CAT in Paris. So the CAT, that held up really well also. That The cat was down $3.64, which is nothing. This baby, it's down off a high of 52.17. We take a look at this on a weekly. So 48.04. You know, what this did 2 weeks ago, just as our markets had done, you went higher. You did. We got to 5,011 with 700 million versus. Oh, that's interesting. Yeah, so that's saying the cat can actually run back up to 5,000 because this had done a counter trend bounce the week of November 6th, got 703 million versus that downdraft on the 21st, which was 528 million. So bottom line is that does want to get up and try to test out that area. We'll see whether it can get up and over that area. Pretty impressive, though. There's no doubt about that. Gold. What do we have with gold? Bottom line is that you had price spread out here in the gold market. The price didn't hold. You did, however, have volume inside the move. What I expect you're going to see out here probably tomorrow morning is that gold's going to go after its swing low of that 1073 that was established last Thursday. Now, that's a high volume swing low. It's 208,000 contracts. It'll be pretty hard to break that down. If we do that correlation and we go back and we look at the correlation inside the GLD as to what it's doing, you're going to see there's quite a bit of clarity inside that. And what the clarity is that the GLD and the gold contract is coming back to the November 2009 levels. That's where we have broken topside in the gold market. 103.25 is the number. The first time that we tested that area was in July. On a monthly basis, we tested with 157 million versus 403. So that's pretty intense. 157 versus 403. This month, we're testing it with even lighter volume. You know, thus far, we're at the 16th of November, and thus far, we've only done 59 million shares. That's with about 11 trading days left inside the month versus 157 million. So two different things have to happen. The crucial number to hold inside the GLD is 103.25. That's how that baby is set up. So we'll see whether it can do it. Go back over to the NQs for a second. They're running the market up into the close out here. The NQs right now up 59 bucks. We're trading out at 45.61. Bottom line is that all's you're at. So check it out. This is how intense it is, folks. You're up with 4,800 contracts going against 13 and 14,000 from Friday. This is a market that is bouncing, and that's it. You stay right there, folks. You're going to be coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Dare to Believe. Unknown author. Market-wise, let's take a look at it out here. We have the Dow Industrials up 237, Nasdaq up 56, S&P's up 30, gold contract flat at $1,081.80 an ounce. Silver up 26 cents at $14.23 an ounce. Copper down 5 pennies at $2.12 a pound. Light sweet crude up $1.31 at $42.05 a barrel. Bonds, the 10-year up 4 ticks 126.21. 30-year flat at 153.12. King dollar up 383 ticks, trading at 99.48. The euro is down 88 at 106, and the yen is trading at 123.19. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have out here? Okay, let's get this baby up and take a look at it. So, you have a market goes topside today. Rejected lower price. Did have lighter volume. The SPY right now is trading at 205.62. So what you have here is this. We'll see what type of volume we have tomorrow. I expect what you'll see, once again, is a contraction of volume as you're running into the downdraft from November 9th. Last week, what we did, you came straight down from a price point of 211.50. You get down to 202. You have the lows out there, had some juice in them last week. Today, the SPY got to a lower low, did have lighter volume, and did reject lower price. So now the real key is going to be, how do you come into the downdraft from November 9th? The downdraft from November 9th, that low there is 206.95. What I expect you're probably going to see is you're going to get up into that level. We did 131 million shares. You'll get into that. You'll have lighter volume than 131 million. You reject it on price. That would set up an ABC structure on the way down. So that's the bearish part of it. The bullish part would be that you have an expansion of volume and you basically blow away the 131 million and you blow away the price of 206.95. The NDX 100, the 3 Qs. Let's take a look at the 3 Qs. What you have inside the 3 Qs is this. Same type of setup. We've rejected lower price today. You had lighter volume. On Friday, we did 52 million shares. The low that was established was 109.78. Today, we got to 109.48. You did 33 million shares, so that's a lower low, lighter volume, rejected it, go higher. Same setup there, meaning November 9th. November 9th, the benchmark on the way down. So November 9th, inside the Qs, this is what you have. The low is 112.86. The volume's 33 million. You come into that, you get lighter volume. What that sets up is that would be a B to C of an ABC structure on the way down. That's how that baby is set up at this particular point. The gold contract. What do we have with gold? Bottom line, you had price spread in gold out here today. You had volume. The price did not hold. You got to 1097.40. We did 144,000 contracts. So what do we have? Well, the low of last Thursday, 1073, looks like it's going to get tested. Now, we did 200,000 contracts at 1073, and I expect that level will hold. Bonds. Now, this is going to be wild watching the bond market, and this is why. So, the 10-year bond, both the 10 and the 30, folks, okay, got back inside their higher range. The 10-year bond out here today did 907,000 contracts. Now, that's not bad, but in order to, you got the price spread. To me, that wouldn't be enough volume for real conviction. Conviction would need about 1.2, 1.3 million contracts. Now, we're inside the higher range, however. So we're at 126.22. I expect what you're going to see tomorrow is that this is going to go after the 127 area. You go after that 127 area, and if we have an expansion of volume, that is saying, once again, that the bond market wants higher price, lower yield. And, you know, the Fed has been saying that they're going to go up on the rates in December. We'll see how that shakes out. Right now, the 10-year is trading at 2.26. We go over to the dollar index. We take a look at the dollar. What we have with the dollar is this. The dollar did 31,000 contracts today. We're at 99.47. Now, the last high, as the dollar index was finishing up its ABC structure on the way up, was 99.60. The actual A to B equals C to D is 99.98. When we got up to that level, we only did 23,000 contracts. Then we came off that level last Thursday, and we went down with 44,000. We're up on 31 today. It looks like it's going to at least try to hit it. The surprising point out here today would be that, number one, that the dollar didn't go to the moon. If we go over to the euro, we take a look at the euro. What you have with the euro came into its lows. The euro is at 106.87. We pull this back a bit. What you're going to see, the last low that was out here is 104.63. What I do, my take on this out here this morning, my son and I have a great show at 10 o'clock. If you haven't heard it yet, you can get it right on your cell phone at TFNN. My take is that from last night to today, folks, you had central banks and they're stabilizing the market all over the world. And I suspect that's what we're looking at out here. After the close out here, let's go take a look at Urban Outfitters, URBN. Now, Urban Outfitters, man, this is just such a trip what they pulled off this afternoon anyway. Bottom line is that they have decided to get in the pizza business. That's what we're talking about. So Urban Outfitters closed at $22.67. They just come out with numbers. It's trading at $21 right now. And let's see what they have to say. Okay, their net sales was $825 million. Their earnings per share was 42 cents. Their sales were up 1%. They expected their sales to be up 3.4%. It was up 1%. So bottom line is that it's going to, it was down $1.82 today. It is trading down another buck right now. Well, actually, no, it's trading down another $1.50 right now. And they're getting in the pizza business. So we'll see if they're going to convert some of their stores, but I suspect that's what it's going to be. If you pull Urban Outfitters back, what you have out here is that you have a high volume swing low. Do not touch this thing, man, because you have a high volume swing low at a price point of $12.33. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials up 237. NASDAQ up 56. S&P's up 29. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished up 237, Nasdaq was up 56, S&Ps were up 29. And what you still had out here, folks, and this is something that you absolutely want to wrap your head around, is this. The amount of equities that were down percentage-wise versus being up continued to be lopsided, and specifically lopsided in the aspect of Dillard's down 6.5%. You're talking about Priceline down another 2.5%. Forget Clovis Oncology. That was down 69%. That thing just got absolutely killed. Pretty wild. You had USANA Health Services down 4.5. We had BioMarlin down 2.6. A couple of the biotechs were off 5, 6, 7%. Puma was off 5.5. Dillard's got hit again. Dillard's is down 6.4. You had Macy's getting hit. Urban's getting hit out here right now. The Urban deal is pretty wild, man, because that they are buying a pizza chain. They're going to get in the pizza business, folks. And, it's probably pretty smart. That's the bottom line, because they're not going to have to compete with Google inside the pizza business. Urban Outfitters, they decided this morning. It doesn't say how much they bought it for. It's a gourmet chain out of Philadelphia. So we'll see how that shakes out. What I expect they're going to probably do, though, is use some of the stores that they already have to change those stores over. It's not saying that, but when you have that many retail stores and those retail stores aren't performing, many of their stores are inside malls, which, if they can transfer it, that wouldn't be a bad transfer. Nuance Technology, N-U-A-N. Nuance. Nuance Technology closed at a price point of $17. Right now, that's trading at $18.20. This equity, I believe, this is about the whole speech deal. Nuance is off a high of $31. You're at $18.20 right now. What Nuance is saying is this. Their fourth quarter number, they came in with a loss of 4%, of 4 cents. Their revenue is $504 million. The estimated revenue was $507. And their non-GAAP revenue came in at $513. And non-GAAP revenue, by the way, is grasping at straws, just so you understand that, folks. Now, non-GAAP revenue is that they can give estimates as to what type of revenue and how they book that revenue. And listen, almost half the S&P companies do it. Earnings. The estimated number was 35 cents, and this is going to be for the fourth quarter. They're coming in with 51 cents. So bottom line is that they beat the number. Right now, the equity is up about $1.50. We'll see how it overtakes the the $18 level. This had come down hard in August, just as the other ones did. The difference in this equity, if you take a look at this, which is pretty cool, this does have a high volume swing high from August 7th. Pull this back a bit. You're going to see that high volume swing high. It's sticking out there like a sore thumb. So that thing wants to, at least go up there and test that 1892 area. We'll get over and let's go take a look at the silver market. Silver out here, 1423. So we have with silver out here today, what silver's done, silver's at its lows. the last spike, the last run in silver, October 2nd, we were trading at 1436. You ran up to the 1619 area. Silver did 41,000 contracts out here today. Now, what you have with silver is you did do lighter volume. Silver's low of 1395 is high volume. Both gold and silver, though, they look like they're going to try to make a run into lower price tomorrow morning. So between gold and silver and the dollar, this is going to be a pretty wild market tomorrow. If we go over to the futures market and you want to take a look at natural gas, the natural gas market looks like it wants to spike higher. What natural gas did out here today is this. Natural gas is coming into a swing point, a higher swing point. Here, let me put this one up, actually. Bring this over here. NGZ5. So with natural gas, this is what we did. We did 148,000 contracts out here today. You went from 246 to 234. You took out the swing point of 239. That was 183,000 contracts. So you got over that. You had lighter volume. This is still hanging at that high. That's saying it wants to get over that high. If you go look at the UNG, what you have with the UNG, which is the ETF structure for that, we did 5 million shares. You got to a price point of 1008. 1010 is the swing point. We did 3.9 at that swing point. So what you have there is that you're running into that swing point. You're running in with volume. You gave it up on price, as the rest of the commodities did out here today, but that's saying it wants to get back up into that level. Inside the commodity market, what you had, hogs got hit big time. That was down 5%. Cattle was down 2.5%. Natural gas was off 0.5%. The leader inside the futures market out here today was crude oil. That was up 2.2%. Coffee was up 2%. Cotton was up 1%. Sugar was up 0.9. Bottom line is it's all about that U.S. dollar out there. And we'll see how that shakes out in the next few days. What the U.S. dollar did out here today is that the highs of last week look like they're going to get tested. The index itself was 99.60. And today we've hit 99.54. We did 31,000 contracts. And as you get up into that level, I believe the last time we got up there, the volume was dying on the vine. Yeah, we did 23,000. But that's after, it was a one-way run from 93, 83, October 15th, running up into those levels. So that was the ABC structure, A to B equals C to D. That equation was 99.98. When we made it to 99.60. Most times, folks, when you finish an ABC, whether it's on the way up or the way down, it does something different. And as the pullback, if you're going up, as the pullback, if you pull back with lighter volume, it's telling you the probability is higher that you're going to go right back topside. If you stop pulling back with big volume, that'll say that that move is done at that particular time. If that was an ABC structure on the way down, it's just the opposite. So what I do expect you're going to have out here the rest of this week, and we're in a highly volatile market, even though the VIX, bottom line, has come right back down again. The VIX is at down 1.92 out here today, trading at 18.16. You're still at absolutely much higher elevated levels. Coming up next, we're going to have our man, Mr. Kevin Hinks from TD Ameritrade, Think or Swim. And don't forget, folks, every Tuesday, no matter where you are in the world, you can get right on your cell phone, TFNN.mobi. Kevin's got an outstanding show. If you're into the option market, the commodity market, the futures market, great show. 12 to 1 Eastern Standard Time. Get it right on your cell phone, TFNN.mobi. You want to watch Tiger TV, go to TFNN.com. You'll see it right. Watch Tiger TV. Hit that. Our servers know exactly what type of device you're on. You'll get it delivered. Stay right there. Kevin's coming right back, folks. If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finished up 237, Nasdaq up 56, S&P's up 29, as we do each and every Monday at half past the second hour. We have our man, Mr. Kevin Hinks. Kevin, folks, has an outstanding option show every Tuesday, 12 to 1 Eastern Standard Time, right here at TFNN. It's absolutely phenomenal. Now, if you haven't test drove the TD Ameritrade Thinkorswim platform, do it right now, folks. Come over to our website at TFNN. You're going to see the banner on the top on the side. You can hit the banner. You can bring the platform up. They'll let you trade with paper money. I use it each and every trading day, whether I'm trading options, futures, currencies, or commodities. Okay, it's on one platform. It's absolutely phenomenal. It's a great platform. Kevin does an outstanding show. You can get it right on your cell phone, tfnn.mobi for the audio. If you'd like to get the video, just go to TFNN.com. On the right-hand side, to say Watch Tiger TV. You get the video with all his charts. He sets up great strategies for you. And the bottom line is that he's not going to tell you, hey, is it bullish or is it bearish? He'll explain to you, however, though, what those strategies are about so that you can understand, you don't get backslapped in the back of your head when you think you're putting on one strategy and something else is happening. Kevin Hinks, what's going on?
Tom, how you doing, buddy? Happy Monday.
Happy Monday, man. It's a beautiful thing. There's no doubt.
What a resilient market we have here, huh?
There's no doubt. You know, last night, and, you know, folks, send a lot of prayers, a lot of white light over to Paris, no doubt. You know, but last night, I'm telling you, Kevin, I was watching the futures open. If you're a trader, folks, they opened 20 down in a heartbeat. That was down the S&Ps. The Nasdaq was down 40, and depending on how you trade, that was your trade is a trade. And then I'm going to bed, and it's so weird, folks, because when you trade a lot, you do dream about this stuff, man. It's so weird.
Oh, God, yes.
And so last night, all night, I says, you know what, man, the central banks got to buy this thing, man. They got to stabilize it, just in general. And I don't know whether that's the case or not. Of course, I'm speculating all of it. But sure enough, when I woke up, I says, you know what, hey, so we'll see where it goes. That's the bottom line. But my take is that they had to stabilize something anyway. So
pretty amazing day in the market, though.
Yeah,
you know what I mean.
There's no doubt. There's no doubt about that. You're talking about a market that absolutely rejected lower price, went forward. Your show last week it was phenomenal, man, because you were going through the Nordstroms of the world, the Dillards of the world, and
right.
Those condors. It was interesting because that expected run on Nordstrom alone was $7, and what happened, folks, is I was listening, I was looking at it, I says, oh, this is going to be a trip, because it's always cool when the equities are coming out right after the show anyway. Do you know what I mean? Because your head's on the chopping block.
Yeah. Don't have a lot of wiggle room there.
There was. That was a lot of wiggle room. There's no doubt, man. No.
Right. Right. Well, hopefully, you figure out the expected move and you give yourself enough room. And then if you're wrong, today's show we actually talked about trade repair.
Nice.
What happens if it goes wrong?
That's awesome.
And what do you do?
Yep.
Yeah.
Yep. Now I can, and what he's talking. This is really cool, folks, because it's really important to understand that you can put on a trade, depending on how long you've given yourself, and then if that trade goes south, there's always a way to turn around and repair that trade. It doesn't mean that you're going to go into the positive in a large way, but what it does mean is that you're going to correct what's happening at that point and give you a chance to collect more premium to basically offset that loss, right? Yeah.
And the fundamental theme there is if a position goes against you, but your assumption on the direction of the stock hasn't changed, then you should, investigate some type of trade repair. If it has, if you think, hey, listen, these retailers are having a tough time, I don't see any updraft in sight, well, then you should leave because your trade risk defined and your risk is there. You don't have unlimited. But today we talked a lot about what happens if, let's say, Macy's.
Yes.
Macy's had a big move and it's down. Well, what happens if you think these retailers have overdone it?
Right.
And then what do we do?
Right. And
so I love to talk about that stuff because guess what? There's a percentage. There's a batting average on these, right? Sometimes they're going to move further than you think.
And that's how the markets seem to okay, we know that nothing is all the time, but what happens, folks, is that markets love to overshoot themselves. There's no doubt, man. Do you know what I mean?
Absolutely. Look at Disney last quarter.
Yes.
Right?
Yep.
And one of the retailers this quarter are Disney from last quarter. Right? Should you get out of your trade or should you stay with it and extend the duration and give yourself a chance?
That's intense.
That's the $1 million question, right?
It is, because what Kevin's talking about, folks. So last quarter, Disney's at 122, gaps down to 109, ends up going down to 90, and guess what? It's at $1.15.
Right.
Wow.
Right. Now, the question is this quarter's retailers, what they've done to some of these retail stocks is amazing. Nordstrom's, Macy's, these are good companies, and they're creaming them.
What I'm trying to figure out, Kevin, is that, are we just not buying clothes anymore? Because, when you look at the Home Depots, look at the car companies, we're buying stuff, but is Amazon just overtaking everything and they're just taking 5 or 10% off those clothing retailers?
The question is it a bricks and mortar issue?
I know.
Right?
I know. Yeah.
And then you're starting to see a lot of firms already starting to make adjustments, like Walmart's allowing you to, pick it out online, buy it online, and then go pick it up same day.
Now,
things like that.
Seriously. Now, I don't know if you saw this yet, but this is kind of strange. Urban Outfitters, this morning announced that they are going to buy a pizza place, a Philadelphia pizza chain, right? I'm saying to myself, I see this coming across, I'm saying to myself, well, this is pretty wild. Then I start thinking about it. I says, well, they're getting smoked anyway. And it's like, okay, are they going to take some of their stores are making pizza places, and then they come out.
Or you know what I think I interpret that to be is they're going to give you a different shopping experience, right?
Yeah.
Come here, eat lunch, and then shop. You know, you see a lot of that. Walmarts have a lot of Subways in them, right?
Yeah.
So a lot of places incorporate food because that's how they compete. Come here, eat lunch, and then go shop.
All right, listen, man, they did get me, man. I have a nice glass of Chianti, a nice pepperoni pizza, and maybe buy a couple pairs of jeans.
Get a little you fill your tummy and buy some socks, right?
Oh, man, I'm telling you, it's just really wild. So what are we going to talk about tomorrow?
Tomorrow we're going to talk about, we're going to finish up on some earnings talk, and I think we're going to talk into some things like, you know, if you're good at trading expiration week.
Yes.
Right? If you flourish in that environment, well then really maybe we'll look at some weekly earnings.
Nice.
Or weekly option plays so you're constantly playing them, right? Because remember, as you get closer to expiration of the 4 Greeks, 3 of them heighten as you get closer to expiration, right?
Yes.
Delta heightens, gamma heightens, and theta heightens. Vega doesn't. It gets weaker as you get closer to expiration. So we'll talk about that relationship and see how we can play expiration week.
Because that's Friday, right? I think is
right. No monthly expiration is this Friday.
Third week, right? Third Friday of every week.
What better time?
Of every month. Awesome, man. Well, listen, it's always a pleasure, man. We look forward to the show tomorrow morning, folks. It's 12 to 1 Eastern Standard Time. Right on your cell phone, TFNN.MLBI. And if you haven't test drove the platform yet, folks, go do it. It's an outstanding platform. You can do it right on our website at TFNN. Kevin, you have a great night, safe night. Look forward to the show tomorrow. Look forward to learning a lot, too.
Always a pleasure, Tom.
Have a great one, man. Have a safe one. And stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Check this out. This is pretty cool. This is going to be wild watching how this whole thing shakes out. So Uber, okay, folks, which is the car technology company, it just came across the tape. They are going to sell same day of tickets to the Jaguars home games. Okay, now the Jaguars, folks, have one of the, well, I think they have the worst record in the NFL. But bottom line is that it's going to be interesting to see how this shakes out. So what you're going to be able to do, if you haven't used Uber before, it's a great service, folks. You're just on your cell phone, you hit it, you know where the car is, the car's coming to you. The pricing is there before you do the transaction. You hit OK. It comes off your credit card, end of story. Now what's going to happen is that in these NFL tickets, the day of the game, what they're going to be doing is that it looks like they're going to, it's an experiment, but it looks to me like they're going to undersell even StubHub and all the other transactions that are out there. And right now, what this press release is saying is that thus far, they do have the least expensive tickets inside the NFL. So that good old Uber, that technology, I suspect we're going to be using for many other things. Now, folks, let's go over to our man, Mr. John Logan. Now, at TFNN, folks, on Monday, Wednesday, and Friday, we do 9 hours of live programming. On Tuesday and Thursday, we do 10 hours. Monday, Wednesday, Friday, 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 8 o'clock in the morning to 6 in the afternoon. John starts us off every trading day. Outstanding program. You can get them right on your cell phone. TFNN.mobi gets you the full audio. Bottom line, folks, watch Tiger TV. Tiger TV is dynamite right on your cell phone. Just go to TFNN.com. You're going to be able, you'll see Watch Tiger TV. You hit Watch Tiger TV. Bottom line, you're going to be able to see all the charts, particularly because we're a visual, of course, news network, trading network. As you go out there, what you're going to see, John has this TAS Profile Scanner Plus. It's a phenomenal piece of software. You can test drive it right now, 14 days. As you do the test drive, John just did a workshop, which was on November 12th. That workshop is archived. You can also take a look at that workshop and see how this profile scanner works. It's absolutely a phenomenal piece of software. John Logan, what's going on?
Hey, man. Good to be back with you.
You too, man. And I haven't got to talk with you since the workshop. That was phenomenal, man.
Thanks. We're kind of workshopping tomorrow morning again. We had a really good question this morning about one of the pieces in the scanner, how to read it.
Okay.
And it was a guy, Dave, I think he's out of Texas.
Okay.
Maybe out of Florida or Texas.
Yeah. And
he asked a question that we really just needed more time to answer. So it's about his particular issue was, I think, maybe trading some of the S&P futures or some of the short-term instruments using the breadth, and how he's going to possibly use that to gain a little bit extra edge and get into some market direction. And we're going to continue that tomorrow morning. It was fun. It was a great question, and I think everybody's going to get a lot of use out of it to continue that. So, man, what a day, huh?
Amazing. No doubt. You know, I mean, you get a rejection of lower price, and that's we'll see whether I mean, I'm still a bear, but bottom line, the resilience of the market is huge, no doubt.
Well, I'll tell you what, you got some things still in your favor here. I've looking at the S&Ps, obviously there were some great opportunities today. There always is when there's a big move.
Yes.
And days like today really, really clarify what stocks aren't really wanting to rally on a day like today. So that's some of the good news. And you can find those in the scanner. We've got some custom sorts to, I'm going to go to the home screen here and just show the screen. A lot of custom sorts that we put in here. Very, very to the point, uptrend support stocks, downtrend reversals, things like that. But going back to about the S&Ps, We talked this morning, we talked about short-term 60-minute crossovers in breadth, and that started happening around 11:30 in that area. And we at the same time started turning above some of these short-term profiles. But, you still got a mixed bag here on your long-term breadth. And we talked about this morning also, the lid on this was going to be around that 2045 area. We're kind of still within that noise area on the S&Ps as we've come up into that. And we're, our breadth on our dailies are still just looking actually relatively negative. So, this is, any type of weekly closes above 2045. I know it's only Monday, but, we've come up into this major point of contention. And I think we got a chance to kind of rattle around south off of these numbers right here, even though we had a big rally today.
And what you did have, folks, this is what's so cool about the scanner. The scanner picked up immediately, on the 60-minute, bottom line that the S&Ps are turning, and guess what? They want to go higher, and that in itself, that 60-minute, breadth and that 4-hour breadth is a big deal, man.
Yeah, I mean, it was not the bottom, but you want confirmation.
But it doesn't have to be. Yeah, exactly.
Yeah, you see that on the screen? I'm showing it right now.
Yeah, well, we're looking on the screen, folks. What happens is that they're like little speedometers, okay? And as one turns, and what you're getting is this. You're getting the whole profile breadth of the stocks inside the S&P 500. That's important to understand, that they'll be more above the profile than below the profile. And, that happened at, 11 o'clock this morning, right?
Yeah, so what that means for everybody out there in the car is we're trying to figure out, are stocks balanced, or are they, out of whack, imbalanced on the upside or downside? So we're always trying to figure out what's the net advantage, the net positive breadth or the net negative breadth. You're not going to get this anywhere else except this actual piece of software. And what Tom was referring to is, we do the calculations. We show you here right on the left on the screen over here. We show you how many stocks are trading above profiles, below profiles. And when that, even on a short-term basis, when that sea change event happens, that means that there's some momentum plays happening of stocks really turning in a herd type fashion in a different direction.
Yes.
And that really is something, that's an edge that nobody else provides. I place a ton of value in it. We've got automated trading systems that run off of this information exclusively. And I just can't say enough about it. On the long term, this is, we kind of had a mixed bag here, and that's why I'm not such a fan that, hey, it's off to the races again, because we've got our weekly and daily breadth still mixed up here.
Well, what's interesting is that, the weekly is almost positive, but the daily is pretty negative. That's interesting, isn't it? Yeah. Yeah, right.
Yeah, we had some big daily profiles appear on a lot of stocks when we had that, those pullbacks, and that kind of widened everything. But the weekly, look at it. I mean, it's still daily, weekly. We're still a little mixed up there. We're in a major area of concern, and I'm going to pull this up. We give you those right in the lower left, 2045, 2046 rounded off. And, we kind of got into that area installed with a little bit of a noise factor. We always talk about, a lot of these things aren't to the tick, even though sometimes they are. That 2045 area, I'm showing them on the S&Ps right now. I mean, we powerfully came back up into that area, but we always talk about closes below inflection points and these retests, that's what happened.
Just hang with us a second, all right?
Okay.
Awesome, man. It's John Logan, Tom O'Brien, folks. We're going to be coming right back. Now, in the break, you can come right over to our website at TFNN, folks. Test drive the scanner right here, right now. Dow finished up 237, NASDAQ up 56, S&P's up 30. John and I will be coming right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Talk with our man, Mr. John Logan, who kicks us off every trading day at TFNN, folks, right? Don't forget, right on your cell phone, TFNN.mobi for audio. You want to get the video, go to TFNN.com, hit Watch Tiger TV. And, folks, if you enjoy the program, please tell 3 people. You know, we are growing, and we do appreciate you growling and prowling with us out here, and we appreciate all the help. If you would like to test drive John's program, folks, you can do it real easy. Just come over to our website. You're going to see the Taz Profile Scanner Plus now available. You can test drive it right here, right now, 14 days. Okay, brother.
Actually, we're getting the version that we used in the webinar out tomorrow morning pre-market.
Sweet.
We're gonna release it today, but we thought we'd release it right before we kind of continued this conversation about the breadth, and it's got some insane pre-scans in it, Tom. I mean, like life-changing scans to me.
And folks, if you came to the workshop, it's on your page for 30 days. What I'd suggest to you is go over the beginning of the workshop 5 or 6 times, because to my take, John, is that the beginning of the it's all great. It's all fabulous. But the beginning of that workshop explains thoroughly what you're looking at, and I just loved it. Do you know what I mean? Like, meaning what the beginning of the workshop, folks, is the theory underneath it. So you're just not saying, hey, this is this, you know, he explains what's underneath it, what you're looking at. And that's what's so cool. It's just not saying, hey, buy this and sell this. He's explaining exactly what you're looking at. And that is so cool, man. It's just amazing.
This thing has just got some. It was so difficult to try to cram that webinar into 1 hour, and we ended up going 1 hour and 40 minutes. So
I know, man.
Yeah, I mean, everybody had some great questions at the end, and they were, you know, so insightful. You know, little pieces within the scanner of somebody to, you know, ask those questions. It was we just had to keep going, and you know, we've actually used this morning and tomorrow morning to kind of keep going as a continuation of that webinar.
Well, it's important. There's no doubt, man, because what happens, folks, is that, there's many things in it, and what's cool about it is that we all have different trading styles, and you can use it for your trading style. That's the other side of it. And
yeah, I mean, I hate to sound like Home Shopping Network or something, but it's just like it has something for everybody.
It does, man.
It's the short-term guys. I mean, the cool thing about this is you want to be aware of the major market turn biased opinions that happen, and that's what the breath's for. But these inflection points that we provide, you get a biased opinion around that index slant from the breath. These major inflection points are there, and that kind of lets you say, okay, I want to block out the long side. Not only want to go short around these things or vice versa, but it also allows you to just find some incredible stock picks based on this information and the relativity of how that stock's doing towards the market. And does it have a lot of congestion to get through? And should you wait for a riper area to pick the battle of either going long or short based on, the market and the stocks in general kind of use these profiles as magnets for them to come back into, and
absolutely.
It's just a cool situation.
No, there's no doubt, man. Well, listen, I really appreciate you kicking us off at 8 o'clock in the morning. And, so how long are you staying back in the States?
I'm here, I think, till late January. I'm going to get through.
Oh, that's a beautiful thing. We like that.
Thanksgiving and Christmas with the family and all that for a change. And, then head out back to Asia. But, I'm coming to see you. So get ready.
That's a beautiful thing, man. And, we're all going to be ready for that 8 o'clock in the show, 8 o'clock tomorrow morning. And what's so cool, folks, so check this out. Well, we didn't just bring up, this scans the whole world, we're talking the U.S., but John's scans the whole world. It's amazing. Have a great one, man. Have a safe one. Look forward to the show tomorrow.
Looking forward to it, Tom. Thank you very much.
Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to being right here tomorrow.